I'm a real estate agent. I've worked all year. I never filed my estimated quarterlies because I didn't know if I was going to owe money at the end of the year, and now I'm stuck. Talk to me a little bit about why real estate agents and brokers need to file those estimated quarterlies.
Real estate agents, the problem is many, when they're getting ready to make the payment, say April 15, they have a hard time cutting loose with the money because they may go 6 months without another commission. And they won't be able to get that money back until they file their tax return and get a refund. So there's kind of a tendency to want to hold on to that money and maybe wait till the next quarter is June 15th.
What do they do though? I mean, you're a real estate agent. You're not sure if you're going to owe $10,000. You don't know if you're going to owe 2, 5, 10. How do you figure it out?
It's a safe harbor because there are two ways to do it.
All right.
The law says you have to either pay in 100% of your tax liability from the prior year or 90% of the current year's tax liability. Well, obviously, you're not going to know how you're going to do this year if it's April. So usually you take the safe harbor. They've already done their tax return for the prior year. Let's say they owed $40,000 of tax. You know, they made 120 and their tax is 40 or something. You divide that number by 4, it's 10,000. You pay that every quarter.
Suggestion to our viewers, especially our real estate agents out there: every closing that you have, don't think of every dollar that you get from that closing as yours, because it's not. Take the amount that you're going to owe or potentially owe from that one closing and open up a separate bank account and put the money in that separate bank account and forget it's there.
You could do it that way. You don't have to make quarterlies. In other words, you can make some. It's okay if you want to make a payment every time you have a closing. A rule of thumb would be to take 30% of your commission. It would probably cover your income taxes and your self-employment tax. Remembering about it is the failure to file penalty is much greater than the failure to pay penalty. It's 10 times greater. It's 4.5%, and the failure to pay penalty is only 0.5% per month.
That's huge.
Multiplied by your balance. So by simply just filing the return with nothing more than a tax return that says I owe $30,000, but I'm not including a check, just by putting it in mail with the cost of that stamp, you've eliminated 90% of the penalties that you're going to incur for that year.
That's huge.
Because now your only penalty is, because you filed on time, your only penalty is the small 0.5% per month penalty for not paying.
Right. So max 6% per year for not paying.
And then you've got interest is accruing at 3% right now.
Right, and 4.5% times 12 is a lot more.
Just by buying that stamp and making that filing the return, you've eliminated most of the penalties, 90%. It's too easy.
Yeah.
And that penalty really, it doubles. It'll double your balance every 7 years.
What do you do if you can't pay it? What do you do? Is like, I got to file, right?
You call me and then I get you into a payment plan.
Oh, they do that?